Hello and welcome to another session of the My Solo 401k Financial My Community Daily Webinar Series. We're about to get started. If you have questions or topics you wish to discuss, please chat those over. As always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor is a solicitation. We would never discourage you from, of course, speaking to your tax, legal, or investment advisor. Again, if you have questions or topics to discuss, please chat those over. We want to spend some time on some foundational concepts in the meantime. So, for example, we want to talk about some of the solo 401k basics. We want to discuss mega backdoor Roth. We want to discuss Bitcoin. We want to discuss real estate. Just verifying that the audio is working here. 1 second. All right, so let me share some good content here. 1 second. All right, so let me share some good content. There's the audio is working. So number one, you can always go to our community 24/7. We have over 30,000 members on there of like-minded, self-directed investors, entrepreneurs, people just in the industry or in the space. And there's forums on there where people are posting questions 24/7. So it's a great way if you have a question or just to see what other folks are talking about, just to start to engage. And then, of course, you've got these daily webinars, which you can find the schedule at mysolo401k.net/webinar. We post this, we update the schedule there every day. We go live twice per day, once at 10 a.m. Pacific, 1 p.m. Eastern, and then we're back at 1 p.m. Pacific, 4 p.m. Eastern. So we usually get some good discussion going. Again, another great area to ask a question or see what other folks are asking about. So it's just a great way to learn, to share the knowledge, etc. It's always free to join. All are welcome. So now let's talk about, as I mentioned, let's talk about mega backdoor Roth. So our plan allows for not only Roth contributions, but also mega backdoor Roth contributions. So a solo 401k is really a legal entity. It's the documents that create it. And so what you can do with that solo 401k is going to depend on who your plan provider is. So for example, you can go and get a basic solo 401k plan at a brokerage, like say a Fidelity, for example, but they're not going to allow you to make Roth contributions. Then you got some providers that do allow Roth, but it's very simple. It's very basic. They're not allowing for mega backdoor Roth contributions. They're not allowing for in-plan Roth contributions. So for those individuals that are really focused on maximizing the money that's going into their Roth solo 401k account, the mega backdoor Roth is the best tool because the solo 401k plan has the highest contribution limits for any defined contribution plan available to self-employed individuals. So for example, with our plan, you can still set up a plan for 2024 and make contributions all the way up until your business tax return deadline, including extensions. Now, you're going to be limited to employer and after-tax contributions. So unless your business is taxed as a sole proprietorship, you're not going to be able to make employee contributions. But even if your business is taxed as a sole proprietorship, you're going to have to make those employee contributions. You'd have to set up the plan and make contributions by April 15th. But if you're trying to make mega backdoor Roth contributions, you can still make what are called voluntary after-tax contributions for 2024, as long as you set up the plan and make those contributions by the business tax return deadline, including extension. So if your business is taxed as an S Corp, your tax return deadline is the S Corp deadline. So March 17th or September 15th, if you file a timely extension. And for 2024, the overall limit is $69,000. So this is our contributions page that I'm looking at here. But if the overall limit for 2024 is $69,000, and so if your business is taxed as an S Corp, you could set up a plan. And here in 2025, and as long as you set it up in time to make those after-tax contributions by March 17th or September 15th, if you file a timely extension, you could contribute up to $69,000 as an after-tax contribution, because you can contribute 100% of your self-employment compensation, such as the W-2 wages from your S Corp, dollar for dollar, up to that overall limit, which is $69,000. So there's still time to set up a plan and make those mega backdoor Roth contributions for 2024. Looking forward to 2025, the limit went up to $70,000. And then if you're age 50 or older in 2025, it's an additional $7,500. And then for those ages 60 to 63, you've now got the super catch up. So instead of $7,500, it's $11,250. So you might be able to get up to $81,250 into a Roth or a mega backdoor Roth for 2025. So you've got to have a plan like our plan that allows for those voluntary after-tax contributions. And you want to work with a provider like us that has deep experience in helping individuals through those, make those mega backdoor Roth contributions. Because number one, it's a specific process you have to go through. It's a two-step process, because you first need to put the money into an after-tax account, a separate after-tax account, before it gets moved over to the Roth solo 401k. So it's a two-step process. Number two, you want to work with a provider like us that's going to handle the compliance support. So we handle all the ongoing compliance support, all for a flat fee of $125 a year, including the 1099-R that would have to be issued. So when you first deposit the contribution itself is not reportable, but the subsequent transfer from the after-tax account to the Roth account is reportable on a Form 1099-R. So we handled that as part of our service for no additional charge. So it's a great way to really maximize the money going into a Roth account. You might be behind on your retirement savings goals. So having access to a solo 401k, if you're self-employed with no non-owner, non-spouse, full-time W-2 employees, meaning you're eligible to set up a plan, is a great way to catch up on your retirement savings goals, because the solo 401k has the highest contribution limits for any defined contribution plan available to self-employed individuals. So once the money's in that Roth account, you've got all the potential for tax-free growth, because like any Roth account, the gains are going to be totally tax-free as long as when you take out the money, it's a qualified Roth distribution, meaning you've had the account for at least 5 years and you're 59 and a half years of age at the time of the distribution. Second topic that I alluded to at the outset is cryptocurrency. So our plan allows for not only typical brokerage type investments, such as stocks, bonds, mutual funds, but also true alternative investments, which could be real estate, could be private placement, private stock, as well as crypto. So we've got many, many customers that's the reason, or one of the top reasons that they sign up with us, is the ability to invest in what they want and maybe in what they know, right? And so you need to have a plan like ours that allows for those alternative investments. And then we provide tremendous support in terms of educating our customers in terms of what those solo 401k investing rules are. So at a high level, the rules are that you need to make the investments under the name and the EIN number of the plan. So in the context of crypto, that means you're going to have an account at an exchange under the name and the EIN number of the plan. And there's a number of cryptocurrency exchange providers that will open up accounts for third-party solo 401k plans. We've got customers open up accounts at Coinbase, at Gemini, at Kraken, just to name a few. And then the account will be funded, of course, with US dollars. So you would transfer money over, for example, from a solo 401k bank account over to the account at the cryptocurrency exchange and then invest in the cryptocurrency. Could be Bitcoin. You're not restricted to Bitcoin, but it could be other cryptocurrencies as well. Okay, then the next thing I alluded to was real estate at the outset. So that's in this same category of alternative investments. So instead of buying, say, a mutual fund or a stock, it's certainly possible under the rules, as long as you have a plan, which our plan does allow, a plan that allows for investing in real estate. So it goes back to the basics that I was mentioning, that you need to make the investment under the name and the EIN number of the plan. On top of that, when you make that investment, you have to buy the real estate from an unrelated person. It could be a single family rental, could be a multifamily, it could be a private placement, right? Whether you've got a number of investors who are maybe investing in a commercial project, right? It's got to be for pure investment purposes. In other words, it can't be real estate that's leased out to your child, right? It's got to be just for investment purposes. Has to be a passive investment. So if it's a single family rental, the solo 401k owner can't work on the property, can't maintain the property. As I mentioned, can't use the property for personal use. The investment's titled under the name and the EIN number of the plan. So the title, for example, is in the name of the plan. So when you're signing up, you choose the name of the plan. 2 words and the word trust for a total of 3 words. For example, if your business is an engineering consulting firm, let's say it's Smith Consulting, LLC, you could name it Smith Consulting Trust. It doesn't have to match the name of the plan or name of the business, but it could be a derivative of the business name, or it could be something totally different, right? It could be your favorite color, your favorite animal, right? Blue Elephant Trust. That's the name that we'll use when we draft the documents. That's the name that we'll use when we obtain the employer identification number of the plan, because as part of the onboarding process, we obtain an EIN number specific to the solo 401k. Then that's the name that would be used to open up accounts. If it's a name and EIN that would be used to open up accounts, for example, at a cryptocurrency exchange, to make investments like buying real estate, etc. Yes, the chat is most definitely monitored. Appreciate your patience. We'd like to just lay the foundation with some basic concepts. Now let's start to go over to the questions that have been chatted up. Appreciate the participation. I'm ready to open up a Rob's 401k. How can I contact someone? I was scheduled for a meeting. So let's see here. Thank you so much. Let me grab the history here. 1 second. That's definitely one of the top reasons that customers sign up, is the ability to use their retirement money to fund a business. And that's referred to as a ROBS, or as a rollover as business startup, a ROBS 401k. So grab your email here. 1 second, please. It looks like the call is booked for tomorrow. So we'll be calling you tomorrow morning at the scheduled time at 9:30 a.m. Pacific. I know we had a lot of people booking, so it might have just been confusion about when it was, but we show it's booked for tomorrow. So thank you so much for reaching out. Yeah, we'll be calling you. You rescheduled. Okay. We only see 1 booking under that email address. I see. Okay. Yep. Okay, we'll give you a call though. Thank you so much. Thanks for following up. In November 2024, I made a $20,000 contribution to my Roth from a taxable account. In December 2024, I moved $10,000 from my Roth to a pre-tax retirement account. Is that an allowable transaction? No, it's not. You can go from pre-tax to Roth, but there's no process to move from Roth to pre-tax. We show it as 10:30, or I'm sorry, 9:30 a.m. Pacific. Thanks so much for the good participation. Again, please continue to participate in the forums, in these webinars. If you can't attend a live webinar, you can just go to mysolo401k.net/webinar. You can submit your email, then you get an email later with a recording link. All right, well, we'll give it a moment to see if there's any final questions. I mean, you definitely want to speak about it with your plan provider, but I think subject to that caveat, just generically speaking, I think what folks would do is just make sure that they uh, resegregate the funds. So make sure that any gains or losses related to those funds are moved back to the Roth Solo 401k account. All right, everyone. Until next time, thanks for the good participation today. We appreciate it.